If you just strip out all the noise of the economy and you just focus on Bitcoin, I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. I've been saying $180,000 in the fall of 2025 for a while now, and I think that that's still very much in play. Bitcoin is explosive. The one thing that you have to understand is if you're trading around this, please have your core position. Don't play with the core position because you could easily miss out. This could easily just outrun everything very quickly.
One of the most compelling points Lavish makes is the sheer opportunity that exists in the Bitcoin space today. He emphasizes that institutions are not just cautiously entering the market, they are actively seeking exposure to Bitcoin. The reason? Historical data now proves that adding Bitcoin to a diversified investment portfolio improves the Sharpe ratio. This metric, used by investors to assess risk-adjusted returns, has demonstrated that even a small allocation of Bitcoin enhances overall returns without significantly increasing volatility. Institutional investors, who were once skeptical, now recognize Bitcoin's ability to serve as a hedge and a growth asset. With firms like MicroStrategy leading the charge, institutions are following suit. Lavish notes that Bitcoin's ability to augment portfolio returns is no longer a theoretical argument. It's a statistically backed reality that sophisticated investors cannot ignore.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
What we see is a ton of opportunity in the space. We're super excited about how many opportunities we have and exactly what you just said. We see institutions coming in and wanting to hold Bitcoin. They're wanting to hold MicroStrategy. They're looking for ways to augment their returns. And they know now, looking back on the returns of the past, decade, if you added Bitcoin to your portfolio of other investments, it would raise your Sharpe ratio undoubtedly. And which means it would raise your risk-adjusted return to your overall portfolio. Your returns would be higher and your volatility would go up a lower amount, meaning that your risk-adjusted return would be better. So even if your volatility goes up a little bit, which is not really that much, if you have a reasonable percentage allocation to it, then your risk-adjusted returns are better, and that's a really big focal point for institutions. And now we're seeing institutions come into the space. If you look at IBIT, or if you look at the ETFs, not just IBIT, but Fidelity and Bitwise and the other ones, you've got these massive institutions coming in that you're seeing. Some of the largest holders of these ETFs are like Citadel, D.E. Shaw, Schoenfeld, Tudor. You've got State of Wisconsin's one of the largest one. Morgan Stanley's a very large one. You're seeing banks come in and holding them. You're seeing banks come in and buy MicroStrategy. You're seeing massive funds that people don't even know of. Like one of the largest holders of all the ETFs is a firm. It's a hedge fund called HBK. Harlan Cornevest is an old firm. He's no longer there. It's now being run by the managing partner is Jamil Akhtar. He's a colleague of mine from the Dallas Fort Worth days. But they're a massive holder of this. Nobody would know who they are, but they have over $20 billion of assets, and they're buying Bitcoin because they know that it will be a strong diversification in their portfolio and likely augment their returns. And I haven't talked to Jamil in a while, but that's my guess. And so that's like one institution nobody would have even heard of, but it's a massive hedge fund. They're quietly, have been accumulating. And now you're hearing about banks accumulating Bitcoin. You've got, we saw I think there was another announcement this morning of bank buying. Was it the Swiss bank? You've got and I've got to bring it up. I can't remember who were the big banks. Yeah, it was UBS. So you've been seeing big banks like UBS was announced. You've got Cantor Fitzgerald. You got Bank of Montreal. These are massive banks that are all buying MicroStrategy. I do think that this is going to continue. If you just strip out all the noise of the economy and you just focus on Bitcoin, I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level. And that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way. And then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, and that seems like a deal again, then that's where you really see it take off, Alan. I believe that, I've been saying $180,000 in the fall of 2025 for a while now, and I think that that's still very much in play. And Bitcoin is explosive. The one thing that you have to understand is if you're trading around this, please have your core position. Don't play with the core position because you could easily miss out. This could easily just outrun everything very quickly. And if you look back over the years, I think it's like 10 days out of every year that Bitcoin makes its gains. And so you just can't, you have to be allocated to, you can't miss those 10 days. That's how volatile this thing is and how explosive it is to the upside.
An intriguing topic Lavish touches on is the possibility of the U.S. government using the Exchange Stabilization Fund to buy Bitcoin. While he sees this as a low-probability event, he acknowledges that such a move would be groundbreaking. The ESF, which holds approximately $200 billion, could theoretically allocate a portion of its funds to Bitcoin. If this were to happen, it would create an immediate supply shock, driving prices even higher. However, Lavish points out that such an action could send a negative signal about the U.S. dollar's stability, making it an unlikely scenario.
It's possible that he could use the Exchange Stabilization Fund in order to buy Bitcoin. Now, there's some differences here, though. So he did it through executive order. That executive order could be overturned by the next administration pretty quickly, I would think. So that's one thing. So it's not really as powerful, but it's quicker. You could do it overnight and start accumulating Bitcoin immediately, And so what does that look like? Well, there's $200 billion in that fund. But that's not all available for Bitcoin. There might be 40, 50 or 60 billion available, maybe as much as half of it. But you're talking about, it's still a lot of Bitcoin, $40 billion. And let's say that they pass it and Bitcoin runs. I mean, it's not going to be at 120,000, that would mean that we're probably only buying 250,000 Bitcoin instead of 1 million. But we would be buying it quickly. Maybe half a million Bitcoin, but likely not. If he announced that order, that Bitcoin's going to, it's going to run pretty quickly because of what you just said. Everybody and their, sister and brother are going to be out there buying it, not just other nations. And so, you'll see a supply shock. The big thing is not so many people out there buying. It would be a lot. It would be the other half of it is people be reluctant to sell. Like I'm not going to, if the government's going to be out there buying, I'm not going to sell mine. So there would just be this liquidity issue. It would be a squeeze. And so that's one path. I think it's pretty low likelihood because you'd have to, there's some reasons for that. If he did that, he would be signaling to the world that he's worried about the US dollar, exchange stabilization. Like we have to stabilize our currency, that's a bad signal to the world. And that might send the wrong signal on the US dollar. So that would be worrisome. And I don't I think he's probably reluctant to do that, even if it is something he could do, because he doesn't want to. Trump really cares about his legacy, about how he's seen. He wants the market to be at all-time highs. I know his family owns some Bitcoin. He wouldn't mind that. And I'm sure he wants his Trump coin to be at all-time highs. He's got a huge ego, and he wants his, like, he talks about the market all the time. If he initiated the exchange stabilization fund to buy Bitcoin through an executive order, I mean, that might tip off a sell-off in the markets, in the general markets, because, oh my God, I don't want to own U.S. dollars. Even the government knows there's a problem because of all this debt. Because all these years we've been talking about debt. We've been talking about debt for decades and how it's a problem. It's never been a problem. So when you hear traditional market analysts talk about it, they're like, we'll deal with it like we always have, no big problem. It's just debt. Debt, it creates productivity, and which part of that is right? Okay. It is true that debt creates productivity. It brings future productivity into the now, but irresponsible use of debt doesn't. And so that would tip people off to that problem. And then that means he and his cabinet would probably be reluctant to do that. I mean, what would be the point? Just to get Bitcoin to go up? I don't see that. It depends on the individual. I can't give everybody the same advice. I'd say the wrong number is 0. Get off 0. But what ends up happening, Alan, is, you've been doing this for a while. People start buying Bitcoin. They start reading about it. They start researching it themselves. Again, to bring this full circle to the beginning of the conversation, they start doing their own research. And once you do your own research, by and large, you end up wanting to own more Bitcoin. And so your 1% allocation will become a 3%, will become a 5%, will become a completely unreasonable percent, like my portfolio. So, that's what you do. And so I would say just get off 0. The ETFs are a very easy thing to do. Hopefully you graduate to getting comfortable with buying it on an exchange, taking it off the exchange, and having your own keys that you can manage, because that's the ultimate way to own Bitcoin, where you have access to it anywhere in the world. You don't have to take it with you. You just need an internet connection, and it's there waiting for you on this blockchain, that time chain that's been long established, secure, it's immutable, it's not going anywhere. You have your keys, it's your Bitcoin. And so that's the ultimate way to own it. And hopefully people graduate to that level. But if they're not comfortable with that, I do encourage them to go ahead and buy some ETF, do your research, and start understanding why you'd want to own the real thing.
Lavish emphasizes the importance of owning Bitcoin in its purest form, self-custody. While ETF provide an easy entry point for institutions and retail investors alike, they do not offer the full benefits of Bitcoin ownership, such as censorship resistance and direct control. He encourages investors to start with ETF if they're unfamiliar with Bitcoin, but to gradually transition to self-custody. By holding their own keys, investors gain true sovereignty over their wealth, free from counterparty risks associated with third-party custodians. Please like and subscribe.